Hey, Dan Passarelli here. How you feeling today? Maybe not so good if you're long a lot of deltas, but let's talk about that, shall we? Over the past couple of weeks, I've been talking about how I'm expecting a pullback in the market, and I listed some reasons for that, and I want to recap those reasons because I think that that is exactly how it played out, and so we want to be able to look at what happened and why and what to look at going forward. So one of my primary reasons was that the price to earnings ratio, the PE ratio of the market as a whole in many stocks was historically very high. And that tends to revert to the mean. It's a very, very simple, straightforward thing, and it's tried and true. When the PE ratio gets too high, stocks fall. When it gets cheaper, stocks rise. So that's one thing that has, I think, played out exactly as one would expect. Also, the buy the rumor, sell the news. We've been talking about this cutting interest rates, the Fed cutting interest rates for a long, long time. And every time we talk about it, the market goes up. And now we're faced with the fact that the Fed's probably going to be cutting interest rates very soon, probably at the next Fed meeting. It's very, very highly expected. Last I looked, it was an 85% chance. I'm sure it's a much higher percent chance as of today. I just didn't look at the numbers. So buy the rumor, and then now that interest rates are very likely to be cut, it's sell the news, right? We see that that's going to happen, so now it's time to sell. And then finally the numbers, which I talk about all the time. And today's number, the unemployment figure, the monthly unemployment figure, that came out with way fewer jobs, much higher unemployment than expected. And that is something that Powell and company said that they would consider as far as one of the two criteria for cutting rates. And there's a lot of, there can be a lot of armchair quarterbacking where people say, oh, you waited too long and now we're running the risk of recession, which when you see much lower employment, that's what that means, right? So that would be natural for a market sell-off as well. And then I mentioned yesterday the tensions in the Middle East, which today we didn't get a lot of follow-through, but there's been saber rattling and all that. And we could see a little bit more of that, adding more volatility. Okay, so what's next? Well, first of all, I told you a while back that I bought some puts, and I have sold out of all of them, which doesn't necessarily mean that I think we've hit the bottom. It's just that I know I can't predict the very bottom and did okay on the puts, and so I took those profits, still sitting fairly largely in cash as far as my investments go, and so I've been using this opportunity to scale back into some of them. That is how I've seen this and how I've been playing it going forward, looking for opportunities to sell some really, really rich puts to scale back into investments. We're kind of at that point now. It's looking nice. And there's not a lot of news next week unless some one-off events come up and tensions in the Middle East. So aside from that, we're going to be looking at this purely technically. We've closed decisively below the 50-day moving average. We could see some follow through, but if we get a pop back up, like if it gaps higher and goes through the 50-day moving average, that would be an island reversal, and I would look for a movement higher going forward. That's all I have to say. I hope you have a great weekend. This is Dan Passarelli, Trade Smart.